You've been taught to trade fair value gaps completely wrong. Let me ask you something. Would you buy here on this so-called fair value gap perfect pullback? Most traders that learn how to use fair value gaps do. They see price pullback into this fair value gap zone and they instantly buy for a continuation trade. But here's the truth. Today, I made a little over $1,100 and yesterday, I made $2,800 by doing the complete opposite of what most videos teach you how to do. With one simple shift in how you approach fair value gaps, everything changes. Your trades get cleaner, your confidence goes up, and your losses start disappearing. Let me first show you what fair value gaps are, how to properly use them, and then how to properly profit trading using them. First off, fair value gaps help you identify when the market has made a drastic move in one direction. And how most traders trade these is they look to buy when the market comes back and retests this area of a drastic move higher. And from what I've learned is that is the completely wrong way to do it. Now the basics of how they work is you can have a bullish or bearish fair value gap and it takes 3 candlesticks to identify one. The whole idea is you take the high and then there's a massive candle, in this case a bullish candle one direction, and then you take the low of the third candle and the gap between that high and that low make that fair value gap. Buyers here have pushed the price so quickly that it is an unhealthy move, that it's likely that the price and sellers will want to essentially retest this gap area. Same thing on the flip side in a bearish way. All you're doing is just taking instead the low and the high of the first and third candle, and the gap between those two creates that fair value gap. And so the nice thing is most platforms have a fair value gap indicator, and so they will automatically draw the bearish or the bullish fair value gaps on your chart so you can easily identify them. Now what most people try and do is they try and trade them with the trend. They see that, oh, there is a fair value gap right here and I want to buy when it comes down and tests that and pushes higher. Now the problem with this is a lot of the time the market will break through that fair value gap before it bounces. It'll bounce midway through the fair value gap, or it'll blow all the way past that. It's really hard to profitably know where to enter in on a trade and put your stop loss if you're just waiting for the market to come down to a random price. And so instead, what I've realized over time is this is a great example right here, is when you have a ton of fair value gaps popped up, is that it's actually likely to reverse and you can find a very clean reversal trade instead of looking for a continuation trade. Because in the really strong markets, if you see right here is it just goes up, it'll continue higher and it won't really pull back, allowing you to jump in on that trend before the trend really starts to slow down and it's not really in a good spot. A lot of the times it'll just shoot up higher and then by the time there's a chance to get in, it'll just go sideways or the trend will be already over. So let me walk you through 2 real trades now to help illustrate and show you how to properly do this in real time. These are both trades I took that actually have live trading recordings of them. You can go watch me find these trades and take them in real time, but I'll quickly walk you through them now to save you time and also explain this concept more. Those will have a lot more detailed, interesting insights to what it's like actually executing this in real time. But let me walk you through some basics of how to do this first and what you're looking for when you're taking these trades. Now, the biggest thing that I have learned from using fair value gaps is to look for reversals instead of looking for a continuation. So how I use them is I essentially see the fair value gap indicator pop up, and to me what that says is that this market is overextended to the downside and it needs to reverse, and that these overextensions are great targets for when you jump in a trade and catch a reversal based on that. That's the power of using these with a few key steps that we're gonna go over. But when I was trading this, the biggest thing that I like to see with these is a previous clear support resistance level. So if we kind of zoom out and look at the big picture, as the market's kind of selling off down here, I'm thinking, okay, what is a clean area that I think that it's gonna bounce? Down here is a good level, and I would say over here is a pretty good level too, because we had this big crazy move, and this was basically yesterday's low. And so that's why that to me was a worthwhile level to pay attention to. And so coming into this, that's what I was looking for was, well, okay, we have this big move down. So that's the first thing that kind of keys me into, okay, pay attention here. And these big fair value gaps indicators are popping off too. And then if I actually go into a recording of the trade on a 1 minute chart, this is that move down and that support level that I'm looking at. I'm looking for the market to break this downtrend line. It's pretty clearly done that. And then essentially catch a double bottom here. And so what happens is the market essentially double bottoms here. I like that idea of we're in an area to look for a bottom. And so just to kind of zoom this through, because I just want to show you some quick overview, and then we'll get into a few key factors in a second of really what make this super powerful. This trade I actually took small size because it wasn't a really good crystal clear setup for using the fair value gaps. This next trade, I'll really show you the power of it, but just to show you how this one played out is I had a couple of targets here. Is, mid-range of, essentially this is where those fair value gaps were. I was targeting essentially 2 times my risk as a profit. And then this one was, if it just shoots up, I'll take some off there if it gets all the way up there. Eventually what happened is I got out half at 2 times, and then it kind of slowly moved up, slowly kind of started to sit there and slow down. And so I essentially trailed up and closing out for about $1,100 total on this trade, closing out the first and the second half of that trade. And so that's the trade I took today. So this is a decent setup. On a 5 minute, it's got a really nice clear double bottom. And so that's the couple factors that are really important when it comes to this. The biggest thing is yesterday, I went 3 times that size on this trade right here because of a few key factors that weren't in the last trade. And so just to kind of zoom out to look at this, to kind of show you, well, this was what I was looking at before. We had a big move up here. And so kind of just zooming out, there was a big all-time high right here. And so pulling that resistance zone over, as this market kind of popped up into this, I'm thinking, okay, look at these moves. The market opens up right here at 7:30 my time. So the market opens up and instantly skyrockets higher, making massive fair value gaps pop up, and multiple of them. If you compare this one to this trade over here that I took today, is, there were some fair value gaps and it had a nice move down, but there wasn't a massive red box here of clear overextension. And if I actually go to a 1 minute chart of what this looks like, and I actually traded this on the ES instead of the NASDAQ, but you can see it's pretty similar. There's a bunch of overextended boxes. I'm not gonna get into why I traded the ES over the NASDAQ. If you watch the live stream recording of this, you'll hear why. But essentially you can see here, the market just kind of shoots up. In about, honestly, 20 minutes, it makes a massive move up. I'll pull up the recording of this now. As you can see, it's coming up right into that resistance zone that I'm looking at. And I really sized up on this trade because of a few key factors. And now let me kind of give you a deep dive into the checklist I use for each one of these trade entries and how to know why the fair value gap is gonna really reverse versus, before, a lot of people will try and see that fair value gap and kind of buy here looking for it to go long. And sometimes that'll happen and I'll avoid those trades because of a few key factors. Also, if you're wondering what trading platform I'm using, it's called NinjaTrader. I've used it for over 5 years. It's amazing. I'll leave a link in the description below this video if you want to check it out. You need just the basics of this fair value gap to be popping off. And the biggest thing is having a bunch of them compared to the trade today I took. That'll really increase your confidence, because when the market whips up that high that fast, it's really likely to give it back up because of, remember, that imbalance in the market. That's what really makes this so powerful and allows you to, when you trade, to enter in and risk a smaller amount or have a good risk reward ratio to where you can be risking, $100, $1,000, doesn't matter what your size is, but you're going for 3 times your risk. That's a massive key when it comes to trading. For me, I have found that's way easier to be successful at. And so kind of the first thing is you want those fair value gap indicators. And then second is coming up to this resistance zone. You have to have a key level to be trading these off of. You do not want to be just trading them randomly. Here's a clean example of really just right before this trade happened is where this is big indicator of overextension, right? But you can see there is, if we kind of zoom out, there's not really a good clean level. There's kind of something here, but if you really zoom out, that's middle of the range. The good extreme level is down here. I'm not gonna go over how to draw key levels in this video. I'll link a video up here on how to do that properly. But that is why, and a reason why you wanna stay away from something like this, because there isn't a good zone to reverse off of. You need to be waiting for there to be a really clean zone like this. And then going into a 1-minute chart, because I like to trade on a 1-minute chart right when the market opens. I'll take a 5-minute entry a little later sometimes, or if the market's a little slower. But in this case, I took it on a 1-minute because it made a really nice setup. Now, another huge factor in this trade is there was timing. I have 3 kind of timing windows I look for, and the window this one aligned up was 30 minutes after the market opens. I constantly see reversals happen at that time, and so this is another catalyst on what makes this a really good setup. And then kind of the final thing is, you have this uptrend that's broken, but a big thing is looking at the structure of the highs and the lows, the swings. And so here, in an uptrend, it's making higher highs and higher lows. And so I need to see that stop and it make a lower high. This is a massive key factor here. And so from that point, that's when I look to jump in the trade. Sometimes I'll look and say, okay, I like a 5-minute better, but the 5-minute kind of just chopped here pretty good too. So when I was actually trading this took a long time to get going. On a 5-minute, it looks pretty simple, but on a 1-minute, it took about 20-30 minutes to get going. And when I was trading larger than normal size, I put $1,400 of risk on this trade. My kind of normal large size is 1,000. And because this was such a good setup, I did a little extra because of how confident I was in it. And so it makes just the waiting even that much worse. And so eventually though, it punched down here, moved to break even, and set a limit order here at 2 times my risk. Essentially, a good target is the bottom of the main move. That's the easy money if you ask me. And then after that, my thought was, okay, I will trail this thing and let it keep going if it's gonna keep going. But if it has a big pullback like it just did, I'm gonna get out and call it a day. Now, if you want a 14-page free trading strategy guide of this strategy and the candlestick patterns I follow, you can check that out in the link in the description below. And if you want a detailed walkthrough of how to draw these support and resistance levels, those are really the key to massively improving your win rate. Check out this video right here.